Good morning, everybody. It's Dan Basse and Ben Buckner on Monday, the 22nd of December. Happy holidays. Merry Christmas, everyone. We'll come back and do one more video with a longer term view, probably late Tuesday, so everybody can look at it for Wednesday. It is a holiday shortened week. The markets are closed on Thursday. We will have reports Monday morning and then Friday, but other than that, the market volume is already in retreat in terms of what's happening. I think this leaves us in a position for this week's markets where the charts are most important, followed by South American weather. Cash markets aren't going to do much as we head into the holidays, as many exporters and importers are kind of shut down until we get back into the new year. So cash markets are going to be dull. But as we come back, the focus will be on that USDA crop report and thereafter South American crop sizes. We had our first estimate this morning of a Brazilian soybean crop over 180 million metric tons. Ag Rural came out and put the crop at 180.4. Ag Resource Brazil is working on their estimate and hopes to have it out in the next couple of days. We also expect to be over 180 million metric tons. Other than that, Ben, kind of take us to where we're at. To me, it's the charts in South American weather that still rules in this holiday shortened week.
Yeah, I think that's right. Those that are trading are probably those trading chart patterns more than anything. I think to that end, you've got soybeans recovering from oversold. It's only matters when it does, but RSI has been, I think, the key indicator of short-term highs and lows. We've seen that in wheat, corn, I think maybe now soybeans. You got to reconcile oversold conditions before you make the next move. And so that is probably what happens next 48 hours or so. I do think, our big picture themes, even medium picture themes, are still one of, adequate supplies. And we've seen the market correct in soybeans, I think, because of that. And I guess we're looking at the flow of money as well. This has been a talking point, not only from us, but really the entire ag media space. And we don't tend to pay much attention to CFTC reports and fund positions, only when they're very, very extreme. But I think this one is a little unique in that, as of December 9th, funds were still net long 180,000 contracts of soybeans, which we all can see the price that these positions started to change. And I think you can conservatively estimate something like 120,000 contracts net long were added to the soybean market above $11. So those contracts are underwater and kind of hard to see what gets them back to break even in the next 45 days or so. So does this get closer to zero or flat? I think is going to be a pretty key issue. Certainly going to linger in the background for the next couple of weeks. Funds are also slightly long of corn. I don't think that it's as big of a deal, but there was a lot of fund length added in the month of November, and I think that's being liquidated. That's dominated soybeans recently, but there still may be more to go. It's hard to put together exactly what funds are doing on a daily basis, but again, even conservative estimates probably still long 120,000 contracts today. And again, losing positions, we can all kind of see and feel this. Other than that, I think what's been unique to me over the weekend even, and still we've highlighted this since about the early part of August, is just the complete absence, I would say, famous last words, but complete absence of threats in South America. La Nina has more or less come and gone. It had no impact in Argentina. And over the weekend, we've got 2 to up to 3.8 inches of rain in, I think, the heaviest concentrated parts of Argentina. So where you see the red circle, 3 inches or better in that little part of central Argentina, that is the Iowa, Illinois of Argentina. So I guess we're pushing back potential South American threats probably into after the 10th of January. I think the soil moisture will go a long way in keeping crops historically elevated when we think about crop potential, crop ratings. So Argentina probably not going to see much of a threat, though January is going to be critical there. So that'll be top of mind, of course. But it did rain a lot in Argentina over the weekend. What you're looking at is gauge measured rainfall since Friday. So pretty heavy totals, pretty widespread. And again, mostly across the most concentrated corn and soybean areas. And I guess this is we're seeing crops respond. Not surprisingly, we've already had an incredibly large Argentine wheat crop. They should finish harvesting that in the next 2 or 3 weeks. But yields responded to water. And does this happen to corn and soybeans if we fast forward another 30 or 40 days? We know today or currently the corn crops rated 88% good to excellent. That's a level we've only seen once before. And I think this week's and next week's update from the Buenos Aires Exchange is going to look very similar. So Very, very strong potential in Argentina. And we're kind of talking about Argentina and corn and Brazil and soybeans, because Argentina is the next corn crop that comes at us. Probably the very tail end of February is when they start harvesting that. So can you get global grain supply dislocation if you've already got these crop cycles moving normally, more supply coming at the market in just a matter of a couple of months? Otherwise, to your point too on cash markets, I mean, there's a lot going on. It's Ukraine war still very much ongoing. We've got some pretty odd temperature forecasts across the U.S. plains this week. We know we're going to lose probably 1 million or 1.5 million acres of wheat. China in and out of the soybean market. But what we've been focusing on recently are the cash markets in the U.S. telling us anything? And so far, really since the beginning of the season, maybe just after harvest, they haven't done anything remarkable. So here's what we're looking at in corn: Cedar Rapids, big ethanol processing facility, and St. Louis, so the export market. And they're just pretty aligned with historical averages. Cedar Rapids corn has broken in the last week. St. Louis corn bids very choppy, but aligned with seasonal averages. So I don't think cash markets are telling us anything is amiss. Corn exports pretty incredible, but at the same time, we need those to balance supply and demand longer term. So I think that's why you're seeing muted reactions to every week we get these really, really large corn export sales and shipments. And soybeans too. It just seems like China is executing trades, shipping soybeans, but the cash markets are telling us that everything looks pretty ho-hum, pretty normal. So we're waiting on what's next. I think that's what we'll get into with our long-term outlook. What does the first half of 2026 look like? When we think about physical supply and demand, do things change? Do they change enough to really trigger some kind of excitement in the grain markets? And I think that's what we're looking at. Probably it's weather to us, but again, we are keeping our eyes and ears open for things that are unique. We just don't see that this week, I don't think.
Well, I think that's right, Ben. The cash markets have been dull. We've been going sideways in the world market, though. Even with the Ukrainian bombardments of Ukraine, or Russian bombardments of Ukraine over the weekend, here we have Russian wheat sagging $1 here this morning with Argentinian prices down. So it's this oversupply of the world markets, which continues to be the drag on price. We'll be back tomorrow afternoon with a longer-term outlook, talking more about China. Does China have a deal with the United States for 25 million metric tons in the next 3 years or not? This will be very key as we look at the new year and turn the page to 2026. And then, of course, a new midterm election. And what does that mean for consumer prices in the United States? Be well, everybody. Have a great Monday. We'll be back tomorrow afternoon with a longer term outlook. Take care.
Bye-bye.